Right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. It's actually Thursday this time. Today is June 5th, 2025. And the top story this morning, I just love this one. Hi-ho, silver. Fiery horse with the speed of light, a cloud of dust, and a hearty hi-yo, silver. Yes, I had to research that line, the old intro to The Lone Ranger. But precious metals are ripping this morning, and I just love to see it. You guys may have noticed I'm something of a gold and silver guy with a particular emphasis on silver, which has been lagging its yellow cousin for the better part of a few years now. Well, that seems to be changing this morning. First of all, what's going on here? We've had a couple of things. Gold ripping, silver's ripping, platinum is ripping. We've got a weaker dollar, and we have got a rally in bonds over these last couple of days. All right, that rally in bonds, higher bond prices, lower interest rates. Bonds compete with gold for safe haven status. So we are seeing that translate into higher prices here. Now, the bonds are responding to some weak economic data that we've gotten. We talked yesterday about the ADP payrolls that were missing expectations. We've had some weak ISMs, some weak PMIs, Purchasing Managers Index data. And actually, the markets are starting to react the way they're supposed to react to bad economic data, with people moving to bonds and gold for safety when the economy is not looking so good. Why is that happening? Because we have a Fed that finally doesn't want to do anything. Don't threaten me with a good time. I wish the Fed would not do anything, even though certain people are screaming for interest rate cuts. Look, that's sending gold higher. All those things, the weaker dollar, the lower bonds, resulting in higher gold. But the particular thing that's sticking out at me is, as gold is moving higher here, we're seeing the precious metal laggards, silver, of course, and also platinum, are starting to rally even harder than gold is. Now, silver and platinum have underperformed gold. We saw the gold to silver ratio blew out in April. It went as high as 105. Now, as silver has been outperforming gold over the last few weeks, we've seen that come down to as low as 94 this morning. And also, big move in platinum. I got to send a shout out to my friends David Morgan and Bob Coleman. I had both those guys on the channel about 2 weeks ago, maybe 3 weeks now. And both of them were pounding the table on platinum, saying platinum was due for a big rally here. And like within a matter of days, this big rally in platinum started. So David, Bob, good call to both of you guys. And we've also got a lot of central banks are buying gold as well. And that's kind of interesting. Got an article in Bloomberg yesterday talking about how most of the gold that the central banks are buying is not actually getting reported. So some secretive, stealthy, double secret gold buying going on at central banks, piling up on the shiny there. Well, that's putting more pressure on yellow metals as well. Now, also, before we get too far ahead of this, right before we hit the live button, I got the alert on my phone that Chinese media is saying that President Trump and President Xi spoke on the phone. Period. End of story. That is the entirety of it. Now, it looks like as soon as that story broke, we saw stocks start to rally a little bit, and we are starting to see precious metals give back some of those gains. So there's a little bit of enthusiasm creeping back into markets right now as we speak on this rumor of a phone call between Trump and Xi. I don't know what was said on this phone call. I'm sure it was a perfectly good phone call, as all phone calls are perfectly good, right? We'll probably get more detail in the minutes and hours ahead of what was actually said on that call. I'm sure both sides will put their spin on it. But for now, the markets are happy that the two leaders are talking. Now, also going on this morning, we've got rare earth alarms are ringing in the auto space. Now, this is pretty interesting because it is European and Japanese automakers that are being forced to shut down assembly lines, halt production on some of their vehicles because of a shortage of rare earths. Now, we heard all about the rare earths coming out of China that, with Trump's tariffs and the trade war, and China said, no more rare earths for you. I get that, but that was supposed to be a U.S.-China thing. We are not seeing stories about U.S. automakers shutting down their electric vehicle lines because of a rare earth shortage. We're seeing Japanese and European headlines, Japanese and European companies shutting down their production. So this China rare earth thing, this is not a Trump Xi thing. This is a global thing. I don't know why the Chinese are cutting off everybody. I mean, the Chinese obviously are heavily vested in their EV industry. But that's kind of interesting to see it hitting the Europeans and the Japanese before it hits us. I thought we were the target here. Speaking of China and EVs, China has warned BYD and the other Chinese EV makers to knock it off when it comes to the price war that's been going on in China's EVs. Wait till you see there's this one paragraph in this Bloomberg article about the China saying knock it off to BYD. Guys, there's some trouble brewing in this Chinese EV market. Now, we're seeing like Tesla's numbers are way down because politics, but also because Chinese EVs are creeping into the market. We saw Chinese taking a big chunk of market share in Europe, so much that the Europeans started putting tariffs on Chinese EVs. The China EV market has been exploding. But beneath the hood, there is a mess brewing because, well, they're borrowing money, they're losing money, and they're not paying their bills. And, well, we've seen how that ends, Evergrande. So China is telling their manufacturers, knock it off. This mad dash to gobble up market share at any cost is going to cause problems. We also got Temu and Shine. A big chunk has been taken out of their hides by that closure of the de minimis loophole and the implementation of tariffs. The daily and monthly active users are down high double-digit percents on both websites. We've got Procter & Gamble is cutting 7,000 jobs. I think that is a sign of consumers being strapped by inflation are starting to trade down. Maybe instead of those Bounty paper towels, they're buying the Kirkland ones, or maybe instead of the Tide, they're getting the Arm & Hammer. Whatever the cheaper brands are, that's starting to take a chunk out of Procter & Gamble. They reported some pretty lousy earnings just a few weeks ago. And we've got data this morning from exports and imports, the trade balance, and we've got initial and continuing jobless claims to go along with that. We have a lot to talk about this morning. A lot of charts to show this morning because of all that move in metals. I like the shiny, you may have heard. So why don't we shrink my big melon of a head and let's see what's going on in the markets this morning. And hey, guys, don't forget that like button and that subscribe button for the algorithm if you're new here, because we do this one every day. So come have your coffee with the melon heads as we go through markets. And right now, the S&P is up about 15 points. Almost all of those gains, you may have noticed, came on this one candle. That was that blip, that headline of the phone call between Xi and Trump reported by Chinese media. Again, we don't know what was said, but the market did immediately react to that news. We've got the Dow is up 89 points, 0.21% higher. Again, all of those gains coming in the aftermath of that headline about the phone call. And the NASDAQ is up 54 points, 0.25% higher, also on that same news. Meanwhile, we have got a weaker dollar once again this morning, down 19 basis points, 98.63. The dollar continues to weaken. There was a little bit of a dead cat bounce. We were pushing back towards that 100 threshold. Now we're falling again. We're actually seeing it fall right now pretty hard. I'm not sure what happened in the last 10 minutes that is sending this lower, but the dollar had been weakening on some of that bad economic data. We also had another rate cut from the European Central Bank this morning. They cut rates. I think is that the eighth time in a row, the eighth consecutive meeting where they cut rates in Europe. So actually, that should put a little bit of higher upward pressure on the dollar. So not sure what's driving that weakness in the Dixie at this particular moment, but that lower dollar will be putting upward pressure on the shinies. And then looking over at bonds, we got yields are moving lower again this morning, albeit a much more tame move versus what we saw yesterday. The 30-year Treasury is at 4.859. That's lower by about 3 basis points. The 10-year is at 4.349, off by a point and change. The 2 years at 3.871, lower by a half a point, and the 1 month is down a fraction of a point at 4.273. Now, we saw a big move lower in bond yields yesterday. Remember, a move lower in yields, that's a move higher in price. So what was going on? We actually got a pretty good and concise write-up in Mortgage News Daily about what was happening yesterday. Big bond rally after ADP and ISM. ADP, that's that private payrolls report. ISM is the Institute of Supply Management. That's their PMI, or Purchasing Managers Index, that comes out once a month. We knew the onus was on weaker economic data to justify any decent drop in rates or yields. And we know that the first week of any given month has a high concentration of relevant reports, and that today's slate is second only to the non-farm payrolls day, which is tomorrow, the big jobs number. So we will have a big move tomorrow. Tune in here for that. Today's heavy hitters included ADP employment and ISM services Both were weak, especially ADP. The employment component of the ISM report actually improved, and that serves as a reminder that data doesn't always agree, especially if the sample size is a single month. But if Friday's jobs report agrees with ADP, there's more room for improvement in rates, meaning rates could go even lower. If non-farm payrolls does like ISM employment's index and rises slightly from last month, bonds will likely have to give back some of yesterday's gains. Future musings aside, it's nice to see the market is willing to do what it's supposed to do with this type of data. And that's a good point there from Matthew Graham, who's basically saying, yeah, because the Fed is doing nothing and telling us they're doing nothing, bad news is bad news and good news is good news, not vice versa, because the Fed manipulates markets. So it's kind of nice to have the Fed not interjecting here. Also going on this morning, we've got Bitcoin is a little bit higher here, 105,886 as shown on Coinbase. That's up by about $1,100 from this time yesterday. Not a huge move, but we are moving a little bit higher here. And in the crypto circles, it's important to note this one. The Circle IPO is today. Circle prices their IPO above the range, valuing it at $6.8 billion. The stock starts trading on Thursday. Circle is the maker of USDC. That's the second biggest stable coin in the world behind Tether. They're taking the company public. That starts today. There is some legislation pushing through Congress, the Genius Act, I think they're calling it, that is pushing for regulations on stable coins. Circle is seen as widely benefiting from that legislation if it passes, because Circle is the only stable coin that is compliant with U.S. regulations and tries to stay compliant with U.S. regulations. So this Genius Act would likely see Circle capture additional market share from Tether and some of the other cousins if it gets passed. Anyways, that IPO is today. Now let's look at what's going on in the commodities board. Now, gold was higher by about $20 just a few minutes ago. Now it's still higher, but only about $6.56 here. Spot gold is at $3,379. I think it gave back some of those gains on the report of the phone call between Trump and Xi. You'll notice spot gold was above 3,400 this morning. It hit a high of 3,403, and the front month gold future went as high as 3,427. Spot silver, meanwhile, is ripping higher this morning, $1.36 to the upside. That is up by 4%, $35.89. It had a high this morning of $36. Spot silver hit $36. Once again, hi-ho silver, a fiery horse with the speed of light, a cloud of dust, and a hearty hi-yo silver. I love this. I like the shiny. What can I say, guys? Copper, look at copper this morning, too. That one's higher by 3%, $5.03 for July copper futures. Copper is being pushed higher here, a combination of fear of tariffs and, maybe the weaker dollar also putting pressure on copper. So we're seeing that one move. Platinum, big catch-up play in platinum, $1,144 for July platinum futures, higher by 5%. We'll take a look at that chart in just a second. Palladium is higher by 1.7% as well. And crude oil is moving a little bit higher here as well, up by 90 cents or 1.43%, $63.76 a barrel for July crude futures. Weaker dollar probably pushing upward on that one as well. Now, let's take a look at this gold chart. We're looking at daily candles going all the way back to the start of the year. Now, gold has been creeping higher, making higher lows consistently. And I would just point out, guys, that we are coming up on this level here. Now, this is the front month futures contract, and it looks like we've got some resistance somewhere between 34.20 and 34.35. We were pushing that level earlier this morning before that little bit of a retreat on the news of the phone call. But gold and silver, look, this trend is intact for the time being. Watch that level around 34 and change, though. We break above that, and, it looks like 3,500 will be in the cards. We hit that intraday high of $3,500 back on April 22nd. Wouldn't mind another visit to that one. But as gold is moving, we're getting a much bigger move in silver here. Look at this beautiful chart, 35.92. That is the front month contract. This is a few minutes lagging right now. Everything's pretty volatile at the moment, guys. So don't get so hung up on the exact level here. Just look at our trends. This is a breakout move in silver. We are higher than the highs that we got at the end of October last year and higher than the April and the aftermath of Liberation Day breaking into new territory here. Hey, let's zoom out. Let's set this to 1 week candles. And look, guys, we are well above those silver squeeze levels, the highest we have been in years. As a matter of fact, we got to go all the way back to 2012 to get levels like this. Are we going to be revisiting them Hunt Brothers numbers? Could we? I don't know. We break above 35. Where do we go from there above $35, $36? I wouldn't mind us pushing into the 40s once again. And just want to say congratulations to the Silver Stackers. You guys have been very patient. I've been right there with you. In my opinion, I've been saying this since day one on this channel. Silver is the most undervalued asset in the world. I stand by that to this day. I think silver has a long way to go here. And look, let's just look at this, the gold to silver ratio. 94 here. We're seeing the gold to silver ratio fall. This is silver playing catch up. Gold has had a very good 2024 and silver has been lagging. And so if let's zoom all the way out here to say the beginning of last year, we saw the gold to silver ratio kind of dragging higher most of the time here. We spent most of last year in the 80s. We broke above 100 after Liberation Day with that big move to 3,500 that we saw in gold, at least temporarily. Now we're seeing both metals continue to move higher, but silver is moving higher faster. And so we're seeing that gold to silver ratio come down. And look, guys, historically, let's set this to weekly candles here. The gold to silver ratio does not stay this high for long. I don't know how far back this data goes. We'll go back to the 1980s here. And you can see at this level, it doesn't stay here long. Now, the gold to silver ratio can fall 2 different ways. Gold prices could fall or silver prices could rise. That's 2 different ways it could happen. Right now, we are seeing silver prices rise. The historical average, at least for the last 40 years or so, has probably been closer to 60 or 70. It comes out of the ground at 8 or 9 to 1. And then if you go way back in history, the historical average is actually closer to 25, 30. So silver way undervalued compared to gold here. And one more chart I want to show you guys, platinum. These are back to daily candles for front month platinum futures here. And again, I got to send a shout out to my friends David and Bob who came on the channel. It was like right in this time, end of April, we had Bob and David on the channel, maybe early May. And they were both talking about how platinum looked primed, how platinum should be playing catch up. It was undervalued, especially considered the move in gold. And within a few days of those 2 interviews, we've seen platinum go ripping here, $1,139 on platinum. Now, platinum is interesting, a lot of automotive exposure. Now, there's a lot of trouble in the automotive space right now. But if we are going to see some kind of a war with rare earth metals, and we're seeing electric vehicle production start to slow down dramatically, that could mean the market could start moving back towards internal combustion engines. And the biggest demand for platinum is for catalytic converters for internal combustion engines. So this trouble in EV space that we're going to talk about in a minute here could be very bullish for platinum. Emphasis could be. And one more thing contributing to this run in metals here. Central bankers are still buying gold after a record bull run. Central banks and sovereign wealth funds doubled the pace of their gold purchases in the past 3 years. They just aren't declaring them. Well, no need to be coy about it, guys. Just tell us what you're really thinking. The central bankers secretly buying gold. Who had that on their 2020s bingo card? Central banks have emerged as a driving force behind the record-breaking bull market for gold. And while the true scale of their buying is shrouded in mystery, nobody expects them to stop. Globally, they are accumulating roughly 80 metric tons of gold a month, worth about $8.5 billion at current prices. Analysts at Goldman Sachs estimate most of the buying is secret, although trade data indicates China accounts for a lot of the purchases, along with other unidentified buyers via Switzerland. Taken together, central banks and sovereign wealth funds have been mopping up 1,000 tons a year. That's at least a quarter of the annual mine production, according to the World Gold Council. In an HSBC survey of 72 central banks in January, more than a third plan to buy even more in 2025. None intended to sell. And I just want to show you guys this chart here showing central banks, the blue line, that is what they have actually declared that they're buying. And then the black bars, that is what the actual estimate is of what they're actually buying if you take into account their secret gold purchases. And you can see a big delta here. They don't want us to know they're buying so much gold. Why? Because, well, most people buy gold or silver for a lack of confidence in central bank policy. And we could throw in reckless fiscal policy from elected officials while we're talking about it. And so what does it say if the central bank is buying gold, which typically expresses a lack of confidence in the central bank? Well, that's just shitty optics, isn't it? And so, of course, they're not telling us that they're buying so much gold, but the numbers don't lie. 1,000 tons a year, more than a quarter of the annual mine supply is going to the central banks. Guys, gold is going to keep ripping here. It's going to keep heading higher. All right, now let's talk about what's going on in autos. There's a lot of auto news this morning. Auto industry sounds the alarm as China's rare earth curbs start to bite. Automotive industry groups are increasingly worried about a rare earth shortage. Several European auto supplier plants and production lines have already been shut down due to China's recent export controls. That's according to Europe's Auto Supplier Association, CLEPA, with the group warning of more outages as inventories deplete. They're shutting down EV factories because they can't make magnets. Germany's car industry and auto executives have also sounded the alarm, saying the highly globalized sector is acutely vulnerable to further supply chain disruption. China's Ministry of Commerce in early April imposed export restrictions on several rare earth elements and magnets widely used in the automotive, defense, and energy sectors. The curbs came as part of a response to U.S. President Donald Trump's tariff increase on Beijing's products. Some of the affected rare earth elements are vital components to the production of both combustion engines and electric vehicles. Now, I want to scroll down a little bit here because it's not just European car makers reckoning with a rare earth shortage. Japan's Nissan said it was also exploring ways to minimize the impact of China's export controls by working with Japan's government and Japan's Automobile Manufacturers Association. It's something that is happening as we speak, and it is true that it will have some impact on the automotive industry, Nissan CEO Ivan Espinosa told CNBC on Wednesday. And it's not just Nissan over in Japan. This one just coming out this morning, Suzuki Motor halted Swift production due to China's rare earth curbs, sources say. Suzuki Motors' suspension of production of its flagship Swift subcompact is due to China's rare earth restrictions, two people familiar with the matter said, becoming the first Japanese automaker affected by the export curbs. And that is the Swift. I guess, I don't know. I guess people like cars like that. I don't know. Look, guys, you've got European automakers shutting down the factories because of China's rare earth ban. Japanese automakers shutting down the factories because of China's rare earth ban. I thought this was a trade war between the U.S. and China. I don't see any headlines about U.S. automakers shutting down production lines because of rare earths. I suspect that's coming in the future, but we still haven't seen it yet. So kind of interesting here to see it hitting Europe and Japan first. Now, meanwhile, again in the EV space here, we've got China warns BYD and rivals to self-regulate on price war woes. We've seen a lot of headlines in the last couple of days here that would suggest that maybe things in the Chinese EV space aren't quite as great as they've been telling us. And this one just adds to that pile. Chinese officials summoned the heads of major electric vehicle makers, including BYD, to Beijing earlier this week to address concerns about the long-running price war, according to people familiar with the matter. The meeting was hosted by the Ministry of Industry and Information Technology, the market regulator, and the top economic planning agency, said the people who asked not to be identified. The gathering was attended by senior executives from more than a dozen manufacturers, most of whom Jack can't pronounce, the people said. Officials told EV makers to self-regulate and that they shouldn't sell cars below cost or offer unreasonable price cuts. They also addressed issues such as zero mileage cars and mounting bills owed to suppliers that are squeezing cash flow along the supply chain and acting as quasi-debt financing for automakers, the people said. And I tell you guys, that paragraph is just loaded with goodies about what's really going on in the Chinese EV space. First of all, when Chinese regulators say we need you to self-regulate, that means we reserve the right to come into your house in the middle of the night and gag you and haul you off to a re-education camp if you don't self-regulate. And so we encourage you to self-regulate. China is basically putting a gun to these companies' heads and saying, do what we tell you or else. They should not sell cars below cost or offer unreasonable price cuts. All right, so they're losing money on these cars. They shouldn't sell them below cost. So everybody keeps saying these low-cost EVs that BYD is making, well, maybe they're selling them at a loss, which means they're just trying to gain market share and put the competitors out of business. The Chinese government doesn't want that. They addressed zero mileage cars. We've talked about that in the past. Zero mileage is when they take brand new cars that didn't sell and they just sell them to a used car dealership. It's a used car with 0 miles on it, but then they report it as a car sold because the used car lot bought it from them. Well, that is manipulating the data to make it look like you're selling more cars than you are. When you have a car with no miles sitting on a used car lot, that's not a car that's sold. And then they're also talking about mounting bills to suppliers that are squeezing cash flow. They're not paying their bills. They're selling their cars at a loss, or in some cases dumping them on the used car lot, and they're not paying the people who are making the parts and everything for them. And that is basically a quasi-debt financing for automakers. This is starting to look like the Chinese developer market, like Evergrande not paying their bills and the wealth management products, all while just building stuff that there's no market for. And they're building cars, selling them below cost. The cars, yeah, they're selling, but most of those sales is just moving them onto the used car lot. So how long can that really go on for? And the Chinese government is saying, hey, guys, knock it off. Also going on in China this morning, Shein and Temu see U.S. demand plunge on de minimis trade loophole closure. Sorry, guys, those cheap knockoff clothes, for nothing. Seems the tariffs are taking a chunk out of that market. Use of low-cost e-commerce giants Temu and Shein has slowed significantly in the key U.S. market amid President Donald Trump's tariffs on Chinese imports and the closure of the de minimis loophole, new data shows. The de minimis loophole is like small shipments can basically bypass customs in order to get into the United States. That was very good for Temu and Shein. That loophole has been closed as part of the trade wars. Temu's daily active users dropped by 52% in May versus March before Trump's tariffs were announced, while those of rival Shein were down 25%, according to data shared by CNBC. DAUs, daily active users, a measure of the number of people who visit or interact with the platform every 24 hours. That one dropped over 30% for Temu and 12% for Shein. That was versus March. The declines were also reflected in both platforms' Apple App Store rankings. Temu averaged a rank of 132 in May, down from an average top 3 ranking a year ago. So wow, it was in the top 3 last year. Now it is number 132, while Shein averaged a rank of 60 last month versus a top 10 ranking in the prior year. So you can see here how the tariffs and the trade war really just took a big chunk out of Temu and Shein. People are using the websites less. They are downloading the apps less. And of course, that also means they are buying less crap from those websites. And by the way, guys, I would just point, there's that red bar across the top. Stocks open higher after Chinese state media says Trump and Xi held phone call. That's pretty much the story there. We still don't know what happened on that very good, perfectly good phone call. Let's see what else we got going on this morning. Procter & Gamble have cut 7,000 jobs. By the way, no relation. The American consumer giant also said it would trim its portfolio of brands. Procter & Gamble said it would cut 7,000 jobs, or roughly 15% of its non-manufacturing workforce around the world over the next 2 years. The maker of Tide detergent, Pampers diapers, and Bounty paper towels had about 108,000 total employees as of June last year. P&G executive speaking at a conference in Paris also said they plan to trim the company's product portfolio, exiting some categories and divesting it of some smaller brands in certain markets. The company didn't offer specifics on those plans. P&G in April reported a decline in quarterly sales and lowered its fiscal year sales forecast, citing consumer uncertainty and a volatile geopolitical environment. To mitigate the impact of tariffs, the company in April said it would consider cutting costs, changing product formulations, and raising prices on some items. P&G also faces stiff competition in a battle for market share as shoppers tighten their belts. So people are buying that bottom shelf stuff at the supermarket, taking a chunk out of Procter & Gamble. They are laying people off and selling off some brands in order to compensate for that. We also got a lot of data this morning, guys, First of all, the balance of trade. The United States recorded a trade deficit of $61.6 billion in April of 2025. That is down rather sharply. Look at this data here. Again, when you see these yellow bars, that is because we're below zero. We're in the negative territory. In March, we had a trade balance of negative $138.3 billion. Then came the tariffs, and that slammed shut to $61.6 billion, cut more than in half. Look, we saw the trade balance was blowing out in the months leading up to Liberation Day as people were buying more inventory ahead of the tariffs. Then we saw all that abruptly stop. I would add, guys, this is April data. We have since seen some of those tariffs reduced because of some of the negotiations that either are or aren't happening, depending on the minute of the day. So I expect this number probably going to get a little bit more negative for the May data. And then my guess is resume kind of closing a little bit as the trade balance is closed. Not so much due to economic prosperity, but due to people just not being able to afford the tariffs. The reason for that closing, we had exports in the U.S. This is kind of interesting. Exports rose kind of sharply in April, 289.37 billion versus 278 billion. I'm not sure what drove that big jump in exports. Maybe that was a little bit of gold flowing back over to London. One of the reasons the imports was blowing out was because all that gold that was coming into the United States, creating the illusion of economic decline when really people were just worried that the gold was going to be hit with tariffs. And so they wanted to get it into the country. Well, when gold was exempted from those tariffs, we saw the flow of metal reverse back overseas. So it's possible gold is contributing to this big increase in exports. And of course, imports, we saw a big decline in imports because tariffs from 419 billion down to 351 billion. That's not surprising. And this morning, we also got some jobless data. Interesting here, we got a new recent high in initial jobless claims, 247,000. That is up from 239,000 last week. And importantly, guys, we are hanging out at these higher levels now. We've seen us hit these levels a couple of times before, usually like once a month we'll hit those levels. But now we're there twice in a row. So possible the pace of job cuts is picking up steam a little bit here. These, again, are weekly numbers. This is for the week ending May 31st. And we are continuing to see elevated continuing jobless claims. This is people who have lost their job several weeks ago, continuing to collect benefits. What was the actual number? 1,904,000. So that's about 1.9 million. That is 2 weeks in a row, 3 weeks in a row, really, of these higher numbers, continuing claims, continuing to get higher and higher as people struggle to find a new job after losing their job. So the labor market, the weakness continues there. We got that all-important non-farm payrolls number is coming out tomorrow. That is a number that always moves markets, that typically moves expectations for Fed action. So come on back tomorrow morning and hear more about that one. And I just want to say thank you very much to Mr. Brad. How do we say that, Brad? Sclaro? Brad S. Thank you, Brad, for becoming a new Melonhead. Welcome to the Melonhead, sir. I appreciate the support of the channel very much. By the way, just a reminder, guys, when you are a channel member, you get a free super chat once a month that if you want to use that, I will read and respond to your questions or comments on the air. Thank you, Brad, for supporting the channel. And Armando Reyes, what's going on, brother? He says silver is ripping because the U.S. is short on missiles, and Putin said that he's going to smoke anyone who had a hand in the attack. Zero Dark 30. Look, I'm not so worried about Putin's retaliation. I mean, look, he's already invaded the country. I mean, there's the geopolitical things are already a freaking mess. Is Putin going to retaliate? I'm sure he will. I'm sure there's going to be some response. I can tell you his retaliation probably won't involve the use of strategic bombers because he doesn't have very many of those left. Also, by the way, not included in the headlines about that drone attack in Ukraine, a couple of Russian AWACS were hit, those airborne early warning and control planes. Those are assets you definitely cannot replace and are far more valuable even than strategic bombers. So the fact that those AWACS were hit, I think that's now 5 AWACS that Russia has lost since the start of that war. That is an irrecoverable loss. So, yeah, I'm sure Putin's going to respond. Now, the use of missiles, I've seen that. There is a lot of silvers used in cruise missiles, the electronics and the guidance systems that go into missiles. So Is that going to really drive silver prices higher here? I don't think that's really the response here. I think silver is more responding to the weaker dollar, more responding to the lower interest rates, and the fact that gold has just run so much ahead of the other precious metals. They were due to catch up. That being said, over the next few years, I would not be surprised to see industrial demand for silver, in particular military applications, start to rise. Let's just say I don't think you need one of these, Armando, to get to that conclusion. I'm not sure it's necessarily moving the price today, but I do think over time it will continue. I mean, there's a headline this morning. Secretary of Defense Hegseth is over in Europe trying to get NATO to spend 5% of GDP on defense. The NATO target used to be 2%. So 3% of GDP more going into defense spending. Hey, remember when we were all going to cut spending? Remember that? Wasn't that funny? So, yeah, I do think military applications probably going to lead to more silver consumption eventually. I don't think it's happening quite yet. Thanks again, Armando, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads. Congratulations, stackers. The opening bell's wrong. Hopefully, we're not giving back all those gains already. That's known to happen sometimes. Don't forget that like button and that subscribe button on the way out. Also, thank you for the super chats and my magnanimous Melonheads on YouTube and Patreon. Thank you guys for everything you do for the channel. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody else, until next time, live small and dream big.